All right, welcome. It's Wade with Trade ATS here, and I am with Edgmin, and he is a Southern California native like myself, and has been in our funded trader acceleration program. How long you been in the program?
Probably just under a year. It'll be a year in September.
Okay, all right. So you were one of the first ones that,
Yeah,
that started
I
the program. Okay,
signed up the
excellent.
first time it was offered.
All right, nice, nice. Okay, so you've been in the program, um, and so what we're doing here is we're doing a coaching session and going to kind of go through what your program is. You know what you got, how you're approaching trading. We all use the same methodology, the same terminology. We have the overall understanding, but there's specific things that people do when it comes to time frames. A risk management that suits them according to their resources, things like that. I want to get into all that stuff with you. And my goal for this is to, by the end of this, that we get this thing narrowed down to what is your approach going forward, and what you're doing right now might be totally fine. We're going to explore that, but if there's some adjustments that we can make to make sure that you're trading as effectively as possible and that you could get where you want to go as fast as possible, that's what we want to figure out. What we need to do to make sure that you're on track for that. So let's start kind of talking about, I want to start this out. I think that trading and the way that we approach trading is going to be highly specific to what our situation is in life. I think where a lot of traders go wrong is that they pick a strategy and particularly timeframes that they are not well suited for. Mm-hmm. So explain to me a little bit about your situation. Like, what do you do for work outside of trading? What's your day look like?
Yeah, so I recently graduated from UCLA in June of 2022. So for the past year, I've been out of school and preparing for applying to medical school. So I've just been busy with that, but I do find time in the mornings and afternoons to analyze charts for like a few hours. Okay. And throughout the day, periodically, I'll just check in the background just to I always have it in the background. I always have the charts in the background, but I like tutor here and there. So I kind of I'm on my own schedule for now until I eventually start school. I start medical school next year. So
okay, excellent. And so medical school, that's going to be a heavy lift. I'm assuming your schedule is going to get quite a bit busier than it is now.
Oh yeah.
So okay. So right now, what's your goals for trading? What do you want this to do for you? Because realistically, if it's money, then that's this could definitely take care of what medical school would do. So
yeah,
I know you're probably balancing which one becomes more significant to some degree, right?
Yeah.
So explain to me kind of what are you thinking in that respect?
So kind of the goal is to be able to do it kind of in the background. I've always felt like trading is something that could always be on your time. So whenever you have like any opening or free time you have, I usually like to dedicate to trading. That's kind of how I always approach it. And like the goal for me is kind of to make a little bit of passive income to be able to give to my parents in the future and like kind of help them retire, I guess, because trading has been something I learned from my dad. My dad and Frida kind of started trading about like 10 to 12 years ago. And like, as I was growing up, I always saw them like trying to make a living out of it because just like take control of your day and future, like you always say. So I kind of was really intrigued by that. So I kind of fell in love with trading in that way. So yeah, I feel like becoming a doctor, going to medical school is like my goal, but I've always seen trading as something that's like no matter what is always going to be part of my life. So
got it. So it sounds like you're definitely going to medical school no matter what.
Yeah.
So but you want the skill of trading kind of something in your back pocket to say like I got that too.
Yeah.
And it becomes an addition to what your other life pursuits are.
Exactly.
So yeah, okay, totally get it. So okay, that helps me understand your situation a little bit more. Can you
Mhm.
talk to me? I don't know if you want to bring your screen up, but we
Yeah.
can. Yeah, let's take a look at what your setup is right now.
Okay, perfect. So I pulled up the evaluation account.
Okay.
So right now, I personally like trading every single pair. I know you guys say like to focus on a certain pair, and I was focusing on a certain pair for a really long time. I would say ever since I started trading in like 2016. Um, I've only focused on Aussie dollar and Euro dollar,
Mhm.
and I haven't found I would find success, but I would never be able to tell if my strategy was correct. There's way too many ups and downs, and I always found myself looking for like the perfect opportunity in that certain pair. But recently, especially with Circle, how we always talk and give trade ideas in there, I found myself like trying to look for different opportunities in other pairs, and I've found much more success that way. So basically, what I do is in the morning when I wake up, I look at sentiment is the first thing I look at.
Okay.
So I go on my FX book as well as IG client sentiment. But on the IG, I go on every single pair because on the IG client sentiment on daily FX, it only shows a certain amount of pairs.
Yeah.
But I like looking at every single pair. So I go on each one for the rate, and on the side it shows the positions each person has, as well as Owanda's sentiment. They
Mhm.
kind of show the positions, exact positions at each level and the orders that have to be filled. So the first thing I do is always check sentiment, and then I come and just to have a list of where each currency's at. And then I come back on MetaTrader and I look at each pair on the higher time frame to see if it has gone in the opposite direction. Uh,
Okay.
so so if it's gone in the opposite direction, I will go on my lower time frame. So I basically look at 4 hour as well as daily, and then I would come back to 1 hour and 15 minute
Okay.
and look at where liquidity lines are. So let's say if sentiment is long, I would look for blue liquidity. Total sentiment is long. I'm looking for a short position. So I'll look at all the yellow liquidity lines, and I would basically put a sell order at that liquidity line.
Okay. So you're looking at the sentiment. I'm assuming you're trading counter sentiment, right?
Yeah, yeah,
Yeah. So you're going against the herd.
yeah,
So um, okay. And then your directional bias is based on your 4 hour and your daily.
yes,
Now, are you only trading when those are in alignment together, or are
yeah.
you trading when there's mixed?
Only when they're in alignment.
Okay. So you want to see the 4 hour in alignment with the daily, and you
Yeah,
want to see retail trading against that alignment.
yeah,
And then you're looking for a counter trend liquidity line to leg into the trade.
yeah.
Okay. So not a bad approach. And so how have you been doing with that overall? Like are
So
you going up, are you going down, or you flat?
So I started doing this about uh, actually at the beginning of March,
Mhm.
because during the whole entire time during the evaluation and everything, I was only focusing on Aussie dollar and Euro dollar. But then after like with all the circle talk and all that, I decided to switch to the all the currency approach. And I've actually found myself like much more successful. I've I was at 98,000 for the account. Now I'm at 103. So
Okay.
I've been
Cool.
slowly gaining. The only problem I've been kind of having with the gains is when to take uh profit, and sometimes I have my um stop losses a little too tight. But the stop losses aren't the main issue, it's the when should I take profit part that's the issue for me.
Got it.
Yeah.
Okay. Well, you're doing good. And I'll tell you right now that I always go, I definitely argue against trading a lot of different things because it's kind of like, you ever hear the expression jack of all trades, master of none?
Yeah.
Um, literally jack of all trades, right?
Yeah.
So that usually ends up being what happens is that you can never really become like intimately acquainted with one specific market. So I'm always going to be a proponent. I think that if you are a specialist in one market over time, you're going to be able to there's going to be situations where you'll be able to trade, you'll have kind of your break even situations, and then you'll have your little base wins, and you'll be able to go through that. But there will be, if you're following truly one pair, there will be a situation where it lands in such a sweet spot that you can go super heavy on it without taking on a lot of risk. And if you're looking at a lot of different things, you're going to end up with a lot of base hits if you understand what you're doing. And I think that your strategy you talked to me to sounds pretty sound. That you're following the directional bias, all that, excellent. But with this approach, I think you'll find that you're not going to find as many situations where you can go extremely heavy and not have the risk, just because your attention is spread pretty thin at this point. What kind of lot sizes are you using? Because I'm assuming with doing this, you're going to be in multiple trades in multiple currencies at one time.
I've ever since the beginning, I've only done one $10 a pip. So
one standard lot.
Yeah, one standard lot for every trade. Because I'm not totally sure how to approach it with like increasing the lot size or because then it like for my stop losses and take profits, then it like changes the levels that I have in mind for it.
Sure.
So
when you enter the trades, are you setting pending orders at the liquidity lines and just getting tagged in?
Yeah.
Okay. So would you say that most of your trades are tagged in at a pending order, or do you initiate them in the moment?
I would say it's mostly me just hitting the level and entering. I kind of initiate it whenever I'm looking at it like in that moment if it's set up. I would say about like a 75-25 split.
Okay. And 75% to where it was there at the liquidity and it just hit. Yeah. Whether you were looking at it or not, it was just there.
Yeah.
Okay. That's great too. So, okay, you're doing a lot of things good. You're obviously you're going up. So however which way you do it, that you're going in the right direction. Yeah. So again, I think what I've seen working with a lot of people over the last 10 plus years is that looking at too many things is usually a net negative at the end of the day. You seem to be juggling it well. It might be just because, it sounds like you got a lot of time where you're around the screen. Yeah. And you're able to juggle a lot and don't have, you seem like you're pretty young. How old are you?
I'm 23.
Okay. 23. So I'm assuming, do you have any kids, or you don't have, not married yet?
No.
All right. Well, you got a lot of time to yourself.
Yeah.
So, what you're doing is working. I will tell you right now why you're having great results with that is because you are waiting to get the price that you want off those liquidity, and the liquidity is a great place to position yourself from. And you're also looking at the 4-hour backed up by the daily. That showed that those close relationship of those two timeframes show solid momentum. And I'm assuming you start to get a little paranoid about it if the 4-hour rotates before the daily, right?
Oh yeah.
Okay. So everything you're doing is pretty good. And again, like you said, you're going up, so you're able to manage it well at this point. Here's the thing. When you go to medical school?
2024 of August.
Okay. I'm going to tell you right now, I'm going to prophesy something that your success that you're doing right now, if you continue to try to do what you're doing now, when you go into medical school, one of the two things is going to happen. You're going to blow your trading account, or you're going to blow your medical school opportunity. Yeah. One of those two things is going to happen. So you're going to have to make some adjustments before then, because there's no way you're going to be able to have the attention you're taking right now. Yeah. So I would prepare for that. You don't need to do anything right this second, but that's going to cause you to have to pivot what you're doing.
Mhm.
And I would say probably to a much higher time frame. What you're doing right now on the 15-minute, I would say that 15 minutes probably going to need to turn into, I would say, a 1 hour to 4 hour chart for your entry. And your 4 hour chart and your daily is going to probably need to go up to a weekly and a monthly.
Mhm.
Same thing. You could do the same thing
Yeah.
you're doing now. But there's just, I always, one of my rules that I always say that I've always had for myself is that you should never trade any entry time frame out of your two time frames, your entry, your directional bias. You should not trade without, if you can't look at that entry bar once every period. So if
Mhm.
it's a 5 minute, you need to look at it minimum once every 5 minutes, probably more if it's, but a 4 hour chart, if you're in medical school, all that, you could do your overall analysis in the mornings, at nights. You could figure out
Mhm.
where do I think the overall market's going, set your pending orders. And in that case, you can look at your phone and watch things generally to manage them,
Yeah.
right?
Yeah.
You could you could glance at your phone once every 4 hours, maybe even once every couple hours, right?
Mhm. Mhm.
So I would say that, I would make sure that you understand your strategy is going to pretty much need to change when you
Okay.
enter that. Um, and yeah, I don't really need to say much more about that. That makes sense to you though,
Yeah,
right?
100%. Yeah.
Okay. Yeah.
And I'm
Um,
aware of that, so I would like more than willing to transition into the longer time frames because I've honestly felt that looking at the higher time frames, even just looking at it, just gives me like ease of mind too. So,
yeah, it's going to move slower. It's going to give you
mhm.
time to think. That's also going to come with bigger profit expectation.
Yeah.
And it's also going to come with bigger loss expectation, bigger risk
Mhm.
management. It's all just everything gets bigger at that point, which is fine. It all can, you just need to adjust. You got to adjust your lot sizes. You got to you can keep the same types of returns you're used to getting,
Mhm.
but you're going to, again, just adjust everything for the different size, the different time duration, and all that. So, and I'm sure you'll probably be around with us at that point too. So we could
Yeah.
help you make those adjustments. And make sure that you get through that transition. So, um, you mentioned one of the things you need help with because this is, coaching. It looks like you don't need a whole lot of help, but um, is your stop losses.
Yeah.
You're getting knocked out on trades that you'd rather wish that you
Yeah.
could stay in. Let me ask you, when you get stopped out, are a lot of those at situations where you don't want to be in that trade anymore, or are these situations where you wish that you could add to the trade?
I would say there's situations where I wish I could add.
Okay. So if you wish you can add, um, it sounds like you're doing okay with the $10 per pip position.
Yeah.
Um, do you ever add another $10 to it?
No.
It's too
No.
big for you.
Yeah.
Yeah. Okay. That's fine. So what's the biggest position that you would feel comfortable trading for your skill level right now?
I would say I would I've the
Maybe like
most comfortable.
$15, maybe?
Yeah, probably max add $5 more because I feel like with the $25 per pip that was like recommended as the max lot
Yeah.
size for like one trade, I
Yeah.
feel like I find myself questioning my like decision way more. Like I'm not as comfortable as losing as when it's $10 a pip,
Yeah,
especially with
exactly.
the.
It goes back to the whole, did you ever watch the lesson about the pain and pleasure
Oh
response?
yeah, oh yeah.
You can see it. It's like the minute you amp
Hmm.
up your lot size, it's like touching a wound. It's like
Hmm.
you get very sensitive, right?
Yeah.
So you've experienced that. That's good. That's one of those things. If you get your head around that concept, that is literally why people lose,
Hmm.
or one of the big reasons. So $10 has allowed. I'm assuming you've gone decently out of the money on a number of your positions before they've paid on
Yeah.
certain things. Even with liquidity lines, it could go further and
Yeah.
still work out.
Yeah.
Um, so the reason you're having that success is because you're comfortable throwing around that $10 pip.
Hmm.
But you're also uncomfortable adding to it when you get better entry, and
Hmm.
you could, because you're not comfortable going up from that. So one of the adjustments you could make, this is up to you, because you're doing good. and whatever is keeping you having that momentum, I don't want to mess it up.
Yeah.
But you might want to experiment maybe with doing like, I like to have 3 positions.
Mm-hmm.
If you have a max of 15, I would say, maybe think about going to a $5 on that initial position.
Okay.
And if you happen to nail the entry, which I'm sure you probably aren't nailing it perfect every single time, but with liquidity lines are pretty good. If a lot of your entries
Yeah.
are based on that, they're pretty tight.
Yeah.
If you get in at $5 and you happen to nail it and it's gone your way 20 or 30 pips and you see another, time, just throw your next position on, because at this point, you're pyramiding in off of the gains of the first initial trade, but more times than not, you are probably going to get a better entry, and you're going to want to have another bullet to shoot at that without pushing your pain threshold with your lot size too much.
Okay.
Right?
Yeah.
If that's your problem, I would experiment $5. Maybe if worst case, if you want to do 2 positions, $7.50. If we're raising the threshold to $15, $7.50.
Mm-hmm.
Give yourself at least 2 bullets, but I would say 3 just to protect your momentum.
Okay.
You pick,
Mm-hmm.
but I would do that. And it'll take some of the pressure off on the first entry more than it is now. And it'll give you that extra amount of creativity
Yeah.
to add in. So I would that's the only adjustment I'd make. I wouldn't change anything about how you're entering right now, but give yourself the flexibility to add at higher prices. It's a pretty basic fix.
Okay. And then when would you recommend I add that? Well, like let's say I put it, like for example, this trade I had the other day.
Okay. So
On
you
Euro,
bought that
I
liquidity
bought right
line.
here. It went all the way up. I was up about 300, 350, but I had set my take profit up here at this white expansion line.
Mhm.
So it kind of came down back. I didn't take profit, and then it kicked me out at my stop loss over here, which I usually put around 25 pips.
Okay.
And
So
then
looking at this, okay, so you were on that situation, you were buying a yellow 4-hour candle.
yeah, it kind of went against my
Against your rules.
yeah.
So the question with this trade,
Yeah.
do we really want to, I could tell you what you could have done to protect profit because you obviously saw a profit on it, but in reality, should we justify this trade to begin with?
No.
Right?
Yeah.
So, but here's the thing. If this was within your rules
Yeah.
and you entered on that liquidity, that you have to have a value that you're working with, a cycle, right?
Okay.
You're clear on the master pattern, what that is and how it works, right?
Mm-hmm.
Okay, so there's a number of them I see just on your entry time frame, but if we go off that last gray box, right?
Yeah.
The center of that box is minor framework.
Yeah.
The expectation that if you're looking to go long, that you're going to get up through that value, that we have a predetermined expectation that all of our boxes are going to end with the last phase, the trend phase is going to be in the direction of the predominant higher time frame. So when you get above that value, then in reality, that's kind of where it's time to go. That's its time to shine. So when you get above that value, I really wouldn't let it go back below. That's where you want to either protect break even or you want to protect profit at value or around there.
Okay.
There was no reason to really take this big of a loss on this trade. Well, you shouldn't have took it in the first place.
Yeah.
That's why you lost, because you're fighting against the bank. But if it was within good criteria, then, there's, you get through that value level, whatever cycle that you're attached to on the expansion leg you're trading. When you get through that value point, it's time to see what it's made of. It's going to perform or it's not going to perform.
Okay.
So that's all and you're trying to always make the initial math make sense from where you're entering. Maybe it's a liquidity line or whatever. You're trying to make that initial math make sense to get back to value. If it's 20 pips away, then you want your stop loss somewhere around 20 pips typically. Okay. You want to start from a 1-to-1. and maybe even more than that. Just it's still going to be dependent on the framework, depending on the situation that you have to work with at that moment. So, but yeah, that would be, that's always kind of the way I would default to dealing with it is you got to have a value that you're working towards getting through in the
Okay.
direction of your higher time frame. If you don't have that, then you're kind of winging it.
Mm-hmm.
So that would be the one I would have worked with in this case. Does that make sense? And
Yeah. Yeah. I usually like to take it whenever I see another liquidity line, but I totally understand what you're getting, especially if this is like an untouched gray box
Mhm.
and if it's coming back, kind of getting the positions over here. It looked like it should have
Yeah,
been.
well, it is an untouched gray box, but I don't know if you saw, we had the discussion about the algorithm on the last, I think it was the last FTAP webinar.
Oh no, I
Um,
haven't watched it yet.
when we see a gray box like that, algorithmically, it's going to remain a gray box because the next red box that happened after that,
Mm-hmm.
it's when we get a new box, it starts looking at that box and it leaves the old box. But the fact that box, we broke out the low on the gray box and then came up and broke through the high of the box, that makes that a master pattern
Okay.
origination point as well.
Makes sense.
Because
Yeah.
you need a box and you need two expansion legs to define the point. We have it. So this is something from an algorithmic standpoint, it's not going to meet the exact criteria, but from a brain standpoint, this is
Yeah.
where humans surpass computers. I can tell you that you have a value and you have two expansion legs.
Mm-hmm.
So
Especially if it came like
it's
stopped over here, didn't break through,
exactly.
you know.
And you could see that it came back down below. You still didn't get stopped out, but see that next run up, where did that stop?
Yeah, at the expansion.
Right at value.
Yeah, right at value.
And that's your clue. When you start holding a value, how we settle on value and how it behaves above or below shows us, are we likely to are we going to have a declining value or are we going to have a ascending value going up? When we hold value like we did on that shows us the clue at that moment. The future of the value of the market is going to be declining likely.
Yeah.
So you had plenty of clues, even in this situation, even though you're breaking your rules, even though you're trading against your higher time frames, you could see that the gravity of that minor framework value still gave you multiple chances to get off the bus.
Yeah, that's what's so amazing about it. Even if like it just gives you so many insights to what the market's doing.
Yeah, the software's, as far as an indicator out there, I don't think there's
it's
anything
nothing
better.
No.
So, but you still got to follow the rules, and that's, you're doing amazingly well. Given I would, if you weren't doing well, the first thing I would say is stop looking at everything.
Okay.
That's what I would say. But you seem to be juggling it right now. But I would, for anyone that's watching this interview, if you are not seeing, good results, I would say that it's always good to become a specialist. And I think as you start your new endeavor as going into med school, all that stuff, you might start to resonate with that more.
Yeah.
You're going to want a very simple thing. It's not going to be about how many trades you can take. It's going to be about being in the trades, being in the market that you very well understand. And it's going to be about being super effective at that market. And also being there. You're going to be there for a lot of base hits. You're going to be there for a lot of break evens. You're going to be there for a lot of small losses, a lot. But by following that market, it's going to land in a sweet spot every once in a while where, that pitcher's going to wind up. They're going to throw it. It's going to come right down the center and you're going to feel it. And you're going to be like, this one's going out of the park.
Yeah.
And that's where you're going to pull off your month, your quarter. That's where you're going to pull off your year on those opportunities.
Yeah. Kind of like the quality over quantity.
Exactly. So anyway, I don't want to disrupt what you're doing because you're making progress. You're on your way to getting funded. This is a demo for FTAP. This is not an evaluation, is it?
Yeah, I think it is.
Okay, this is you're in your evaluation.
Yeah, I'm in my evaluation.
Okay, so this is it. You get this account to 110K, you're getting a real 100K.
Yeah.
So you're making great progress. And, I would say stick with that. Don't break your time frame bias. So important. So
Yeah.
important. You didn't have to take that loss.
Yeah. I feel like I was trying to time a reversal, which I rarely do, but
You
on this,
don't
yeah.
you don't need to. The trend will give you that's one of the flaws
Mm-hmm.
that most people think, that there's never going to be enough trend for them.
Mm.
There's always enough trend. There's always going to be normally several entries into the trend. Just be patient for it. It's one of those things that you don't need to force it.
Okay.
But yeah, other than that, you're doing amazingly well. And I would just stick with it. And I can't really think of too much more to tell you, honestly.
Mm-hmm.
So,
I had a question
sure.
about entries, kind of in this position. I kind of put my, if I zoom out a little here, I kind of put my entry right at this liquidity line, but would you recommend if I'm so confident about the direction, that I put it at this liquidity line as well?
You're saying
Like,
like further ones?
yeah, like I remember you saying, like, if you're confident about a direction and you get like stopped out in the webinar, you were saying if you get stopped out over here, you kind of have this much room to enter again
Mhm.
if you're like confident about the direction. So like
Yeah.
if you get back to
Yeah.
the original level you wanted, you recoup those
Yeah.
losses.
I would say I would look at kind of the general swing of your higher time frame on a 4 hour and a daily.
Hmm.
You're going to have to be pretty accustomed to 40, 50 pip swings.
Yeah.
Like that's just kind of the nature of those time frames. So if you have a liquidity line, let's say like when you're in the zone,
Hmm.
let's say that it's an ascending trend, it's going up, and you're like you got your eye on some liquidity levels, right? You're
Yeah.
like, I really want those prices. So where you're putting your $10 pip, let's say you put a $5 pip or 750, like we're
Hmm.
talking about. There's your first one, but you see that there's another liquidity line 25 or 30 pips below. Put your other position at that level.
Okay.
You're not, because at $10, you're not comfortable doubling your 10 at this point.
Hmm. Yeah.
So yeah, you're gonna be you're either gonna get stopped out and re-enter at a lower price at the full 10. But when you get stopped out, you always risk not having the confidence to re-enter.
I see. Yeah.
And
Yeah.
there's a huge part of being profitable is time in the market, not timing the market. We're
Mm.
timing the market as best we can, but time in the market is what allows us to see profit.
Yeah.
And so you never want to be in a situation where you're choking off the trade constantly. So again, it always comes down to lotting down and then being creative with adding those position sizes. So in those situations, yeah, I think, starting it at $5 or 750, giving yourself a 30 pip window
Hmm.
that you can add to, nothing wrong with that. And yeah, just it all comes down to breaking up your position size. You could do everything you're saying right now, totally fine, but you got to break it up a little bit.
Hmm.
And you
Hmm.
got to be okay with every once in a while, you're going to absolutely nail the entry off the liquidity and you're going to ride a home run trade at only $5.
Yeah.
I'm sorry. Like you're just going to have to deal with it.
Hmm.
But I'm telling you that is not the rule. That's the anomaly.
Yeah.
You're more times than not, you're going to get plenty of opportunities to stack that position.
Yeah. I've always found that there are times, now that I'm thinking back on all like the trades I've taken in the past month, I
Yeah.
feel like there have always been that opportunity to add to the position. I just never like thought about it, I guess.
There's always that for
Yeah.
every position that you can't add anymore, you just get it perfect.
Hmm.
There's 10 or 20 more positions after that you easily could have added to at multiple locations and got much better entry. And it was all still within your criteria, still within the trend, still a good trade.
Yeah.
So again, I would make that the exception, not the rule.
Hmm.
And by breaking up your position sizes, you'll probably find that you're able to milk quite a bit more out of your trades. And the very least, what you're risking is riding something that you got such a perfect entry in at $5 rather than 10.
Hmm.
So, you could pick what you want. I think experimenting with multiple positions isn't going to hurt you because you're already doing well shooting one position.
Yeah. I think I'm gonna shoot for the $7.50. And
Yeah.
then if that doesn't work out, if I see myself trying to, if I need a little more room, then I think I'll switch
Yeah.
to the 5. But I think I'll be comfortable with the 7.5.
What's important though is that whatever it is, whatever the amount of positions,
Mm-hmm.
is that altogether it equals under what you would feel max
Yeah.
entering with one lot or one
Yeah.
position.
That pain.
You can't don't find yourself where you start at 5, you shoot another 5, and then you change your model, and now your next position's a $10 pip.
Yeah. Yeah.
And now you're at $20, and now you're getting over. You have to respect your pain threshold. I don't care if you are the best trader in the world. I don't care if you're Warren Buffett. Every single person, me, you, everyone, when you get skin in the game where there's any kind of consequence, you cannot snuff out your emotion completely. You can do a lot of it if you have a good process, and you're confident in your process. That takes care of it because you're feeding off your confidence, which is helping you with your emotion. But at the end of the day, that dollar amount going against you, we can only take so much pain. And the pain, if you amp up the pain, your allowance for the market to give it the room it needs, the time you need to see a profit is going to shrink and shrink and shrink and shrink. And you're going to fall victim to being the liquidity for the market makers.
Exactly. Yeah.
The market makers take all that tight liquidity, all those tight stop loss people, they feed off those, man. Those are the dead bodies in Forex are right there.
Everything's based off this pain and pleasure.
Everything.
Ever since I started trading, I never realized until I like joined with ATS that like it really is. Any way you look at it, it's just like who's in most pain and who's not.
Someone else's pain is someone else's profit.
Yeah, exactly.
It's the only way it can work.
Mm-hmm.
Someone has to make the right choice. Someone has to make the wrong choice. And so it's all about, that's why the market always goes to the highs, to the lows. You'll see that it 100% retracements if someone's a Fibonacci trader. Why does it do that? It's because that's wherever a belief originated, however it originated, could be, at a predominant level, there's a belief of a group of people that bought or sold at that level. Mm-hmm. And there is liquidity there. And market makers don't care about price. They care about liquidity. All the big players, they will go where the liquidity is. And so by having yourself loose enough, you have where the higher time frame, where the momentum's driving, that's one of those unbreakable laws in trading. Follow the trend.
Yeah.
We know overall where the flow of money is going. All we're trying to do is be experts at figuring out how is liquidity going to be harvested so that the banks can continue to make money in this direction. Mm-hmm. That's the name of the game. How are they going to put people in pain? How are they going to engineer a situation in this so that they can produce more liquidity so that they can fill their positions? That's it. And so that's all explained through the master pattern. The master pattern is literally my explanation of the embodiment of that process.
Yeah. And I feel like with the liquidity lines, personally for me, I feel like it gives me the highest reward to lowest risk because like I feel like I'm trading like the big banks.
Yeah, absolutely.
So that's what's so like important to me about the levels and then going off that expansion line. So I just love
where the game is being played.
Yeah.
When you trade off liquidity, it's a great place to at least start.
Mm-hmm.
Because you're at the edge of the cycles. We don't get liquidity unless it's at a swing high, swing low leg of expansion.
Yeah.
So when you deal at those levels, you're on the fringes. You're always there, and and at those levels, like it's either I'm going to get paid pretty soon, or it's going to fall apart pretty soon. So that's great, and I'll tell you right now that's a big reason why you're doing so well. Is because you're waiting to get those prices. Mm-hmm. A lot of people, they don't feel confident when the market's spiking against them. Mm-hmm. They don't like that feeling. They want to see it hit. They want to see it rotate and get that confirmation. Well, you're getting the confirmation, but so is a big group of other people. And it's creating another situation for a liquidity harvest. Mm-hmm. And you're positioned with them.
Yeah.
So now if you have wide enough stops, you can rise above that. because when you have wide enough stops, you have small enough positions, your pain threshold's way outside of those boundaries, right? So you can push back and not fall victim as easy, and that's where you want to stay. You want to stay far enough back to where you have some stake in the market, but you can watch and see how are other people getting messed with.
Yeah.
That's where the sweet spot is.
For take profits, would you say I should try to look for take profits at, let's say, based off how the master pattern is looking like? For example, I know you were saying like draw from the expansion line to the bottom, and then usually that's how much it's gonna go from the expansion up. Let's say if you bought below expansion, is that kind of like
the order block projections?
Yeah. I kind of still need a little help with the order block projections. I know how to calculate them, but how do I adjust if it doesn't hit that level?
Well, that's where the order block projections really are representative of in trend. When you hit an order block projection in the trending direction, that's showing that's where we know that maximum intent has been met with the banks.
Okay.
And so if you're not hitting those projections, it's you could kind of think of the space between the swing high and the projection is that how the market operates in there is how much true strength and intent is in the market. So you almost think of it as like a gauge, like a power gauge.
Yeah.
And so that's what in trend, we want to see more weakness on approaching those levels. And that's where we could enter. That's a sweet spot. And then we want to max out those levels in trend. And if you're not maxing out those levels, you got to start asking yourself questions about the trend, at least at the moment.
Okay. So I feel like this would be a good indication then. Let's say this is our master pattern origination point. Just measuring from down here to up here, it doesn't look like as much as from here to the high. So that would be another indication of maybe I should adjust my take profit level because it's not completely hitting the order block projection.
You're saying that we're going to pretending this was a long direction and it was in your criteria.
Yeah.
So when you came through the high of that gray box, you would measure that order block, not off the middle, off the high of the box.
Oh, off the high of the box.
Yeah, because that's where the ultimate liquidity was.
So right here to the bottom.
Yeah, to the bottom of that of the candle, to the right of where you entered.
To the right. Oh, okay.
Where the candle you entered on that last trade, right there, the bottom of that candle, you're right next to it.
Oh, okay. Right
here. Yeah, right there. So it's what is that? 30, about 40 pips. So now measure up 40 pips from where you're at. Yeah. Right there. That's your projection.
Yeah.
So that would be if the banks are going to really commit to a move, whatever the expansion size is, high to low, and it gets wider as you get more expansion legs.
Yeah.
It continues to widen out. They're going to move. The rule is they're going to move at least 100% of that size. And so that's where we look for is we want to see them slam into those projections in trend. And that's how we max out our take profit. But you will also notice if you're coming up against liquidity from a previous move, you'll notice a lot of those projections sometimes will line up with liquidity lines or expansion lines. But if you don't have any of that, let's say it's a trend that's pretty fresh and you're kind of out in new space, which the biggest trends normally are.
Yeah.
Then you could use those order block projections to know this is where I want to max out. And all this stuff is really just reverse engineering into the math for your risk management.
Okay. Yeah. So, I feel like that helps a lot because I kind of so I would say that these order block projections are kind of showing the strength of the trend in a sense, right? Yeah. So that helps because
how they're if it's not hitting them, it's showing weakness.
Yeah, weakness, exactly.
Why would the market makers go through their whole entire cycle or their contraction? If you have an order block projection, that means you have an expansion. a 1-2 leg expansion minimum. Why they don't have enough commitment to move it 100% away from that for a trend phase? Why? You know,
because
it all just leads us to ask questions about their intent.
Yeah. That's why you don't see it hitting those projections. Yeah. So
yeah, but it doesn't mean it can't hit it later. It means it's just this is all about what is happening versus what you want to have happen.
Yeah. So I would say like over here in the moment, it wasn't strong enough to break through, but
in reality, like that entry, in reality, if you were trading the 15 into the 4-hour, great opportunity to go short.
Yeah, exactly.
So you became the liquidity on that one because you were the victim. But that's the point. Like if you were trading that order block projection for risk management and you shorted up there above value, you're getting paid on that trade. Every single one in the controlling trend, every price above value comes back to value and through if the trend holds. Every single one. And that is our edge at the end of the day, is having that pivot point established by smart money, not something we've arbitrarily put. This is something they made. So we're just working from what they're doing. And we are always asking the question, what are they doing? Why are they doing it? How long is it going to take? Constantly just filtering through these questions to figure out what the likelihood of, what's going to happen.
Yeah, exactly.
So, but yeah, I think you're doing great, man.
Thank you.
I would keep it up. I look forward to getting you funded.
Yeah.
So I think you're on your way. So I would just make those minor adjustments, but not too much. And again, I don't want you to mess up your progress when you go into med school. So I would definitely think about how you're going to adapt to that. And maybe that's something that you want to start beforehand, honestly.
Yeah, I think so too.
You don't want to start a totally fresh new approach and be taking on all that new. There's going to be a lot of change in your life at that point. So I have my sister-in-law has been in med school for a long time, and she's out like traveling around, and she's in a new city every month right now. She's just about to be done with it, but like her life's crazy. I can't imagine just knowing what I know, what she's going through. But if you're going to do anything similar to that, like it's a lot.
Yeah.
So you're on the verge right now of having this skill in your back pocket forever.
Yeah.
No matter what happens, you'll eventually probably have your own practice. I don't know what your goals are there, but like you're going to do great on that. You're going to probably be very fulfilled in what you're doing with that. It's a great career, but this right here, you keep this up. This is true freedom right here.
Yeah.
You can literally, if something happens, you can move to another part of the world and no one can ever take this from you. Yeah. So
that's what I love about it.
It's incredible, but it is extremely difficult.
Of course. Yeah.
And there's a very fine line between having it and not having it. And you have to constantly work to keep it once you get it.
Yeah.
So, but you're very close right there. I would say stick to your rules, your 4-hour in the daily. Don't go outside of that. Keep that going for you. And I would say experiment with breaking up your position sizes to give yourself a little more fluidity as far as nailing those entries. And you probably won't see a dramatic difference, but over the course of the next,
compounds
30, 40 trades, you'll look back and be like, yeah, I'm compounding faster.
Yeah.
Thanks for letting me go over this with you. Was this helpful? Did you get
a lot? Yeah. I feel like every time, even with the webinars, every time you guys talk, I just get 1% better. So
yeah,
I'm loving it.
You'll have those little epiphanies along the way. It was the same thing for me. And it might be something that you heard 100 times, but you hear one more time, you're like, okay, I totally get that now.
Yeah.
And we're always going to pound the same drum. I do. I'm trying to get it more and more the same, more and more basic. These are the rules of the market, man. It's trend and understanding how liquidity is going to be harvested. That's all that matters. And you got a system, you got software here, you got a mindset for doing that. And this is how you're starting in this business. I mean, if you stay on track and you don't go down all the other rabbit holes everyone else goes down, you're going to absolutely crush it. You're going to be, most of what we have to do with traders is
Mhm.
get them to give up their bad habits
Yeah.
from before. And it sometimes it just never happens.
Yeah. I
But
feel
right
like,
now you got none of those, man. You literally started in the purest form of trading that you
yeah.
could get to.
And that's what my dad and my aunt always say, because they feel like they've been so bombarded with all the negative stuff
Yeah.
that when I'm starting fresh, it's with you guys, especially since 99% of people blow their account. But I feel like
Dude,
with
you're
you
on an
guys,
evaluation account. This is
yeah,
your first evaluation. You've only been through one, right?
yeah,
This is your first evaluation. You're already up. You only got to go to 110. You're at
yeah.
103. And how long have you been trading?
Uh, with you guys seriously for about like a year and a half.
Okay, a year. And this is not the easiest methodology to learn.
No,
It's there's complication, it's can be complicated, but you're getting your head around like, dude, this is just the beginning. Like you're
yeah.
gonna kill it.
Thank you.
So
I feel like it's all because of you guys. So thank you for
well, we appreciate it. I mean, this is
all you
what
guys
it's all
do.
about, man. So
Yeah.
you're not you're this is it, man. Just keep getting good. You already are good. Just keep getting better. And those little minor changes you're gonna make, you're just gonna
Mhm.
refine your approach, refine it, and just keep scaling on this. Keep scaling on it.
Definitely. Yeah.
So, all right, man. Well, I'm gonna let
Thank
you
you so
go.
much.
Yep. Thanks
Take
for spending
care.
this time. All right. See you,
Thank
Edgmin.
you.
Bye.
Bye.